Hey traders. For this lesson, we're going to take a look at the different types of charts that exist and discuss which ones are best for trading. Once again for this lesson, we'll be taking a look at a live screenshot of my trading platform. One thing to keep in mind throughout this lesson is that different types of charts are for different people and different types of traders. Different chart types also convey different information. What I'm going to express in this video is my opinion and what I have found through my experience to be the best chart and best setup for day trading. I'm going to first click on my chart settings, and on here I can select the type of chart that I want to look at. The different chart types on my platform are the OHLC bar, candle, hollow candle, line, mountain, and simple bar. We're now going to take a look at the line chart, which is what is found on most trading websites and online browser-based trading platforms. On this chart, the average price is drawn on a basic line. It is not as easy to see support and resistance, and not easy to see the highs and lows of a 5-minute period. This chart type does not convey the same information as seen on a candlestick chart. Now we're going to take a look at the mountain chart. We can see this chart is the same as a line chart, however the bottom of this chart is shaded in. This is similar to the charts seen on CNBC. This is simply an aesthetic change from the line chart and has the same pros and cons as the line chart. Our next chart type is a simple bar chart. This chart looks like a bunch of volume bars, though they represent price instead of volume. This chart is not very useful in trading. The only useful information this chart conveys is an up and down trend, which we can see in this area. This chart fails to show the lows of these bars, but rather only shows the highs. We're now going to move on into the candlestick family and take a look at the OHLC bar chart. As you can see here, this chart displays information similar to a basic candlestick chart. The bottom of this candle represents the low of that 5-minute period. The high of this candle represents the high of that 5-minute period. This little tick on the top represents the price when the candle was opened, and the tick on the bottom represents the price at which the candle closed. The next chart we will look at is the hollow candle chart. This is also similar to a normal candlestick chart, but upward price movements are hollow and downward price movements are shaded in. This chart is simply aesthetically different from a normal candlestick chart. Lastly, but most importantly, we're going to take a look at the candlestick chart, which is the most popular among traders. This is the type of chart that Shoot and I use while we day trade. Looking at a green or upward candle, we can see that the bottom line is where the price opened and the top line is where the price closed. The green shaded area of the candle is known as the body. We then can look at the wicks, which are the thin black lines which extend from the top and bottom of the candle. Wicks indicate price movements during the 5-minute time interval that are above or below the open and close price of that candle. Now looking at a red or downward candle, we can see that the top line is where price opened, the bottom line is where price closed, the red part of the candle is the body, and we can see the wicks in both directions. In my experiences, candlestick charts are the most popular among traders because they convey the most information out of any of the charts and do so in a clean and concise method. We can easily identify different support and resistance levels on a candlestick chart and also easily identify trends. The candlestick chart also helps us identify how price reacts to different support and resistance levels because it utilizes wicks to help identify sudden and sharp price movements. We can also easily change the time interval on the charts. Here we will change the time interval on a candlestick chart to see how price reacts over time periods at certain price levels. For example, if we change from a 5-minute interval to a 1-minute interval, we can see that price wicked up several times to this same price level. This can be helpful in identifying exactly how price reacted to different levels and utilizing this for timing our entries and exits. That was a brief overview of the main types of charts that exist, as well as my opinion on the best type of chart for trading. Keep in mind different platforms and charting softwares will also offer different types of charts than what we covered, although we did cover the most basic and common types of charts that traders use. For our next lesson, we're going to take a look at conventional chart indicators, as well as different types of market data that exist on charts, and explain the difference between the two. Until then, and as always, good luck with your trading.